The relationship between the United States and Canada has long been one of the most stable and mutually beneficial trade partnerships in the world. Linked by geography, history, and intertwined economies, both nations have relied on each other for decades to fuel growth, innovation, and prosperity. Yet in 2025, this relationship is facing one of its most serious challenges in years. Former President Donald Trump, returning to the political spotlight with a renewed nationalist agenda, has threatened sweeping new tariffs on Canadian exports. The announcement has sent shockwaves through political circles, rattled financial markets, and reignited debates about the fragility of even the strongest economic alliances. For Canada, these threats carry both symbolic and practical weight. While political rhetoric between Ottawa and Washington is not new, the direct targeting of key Canadian industries, especially those tied to energy, metals, and agriculture, signals a potential unraveling of trade stability. The tariffs, if implemented, could disrupt billions of dollars in cross-border commerce and trigger retaliatory measures from the Canadian government. Beyond the immediate financial implications, the move raises deeper questions about the durability of North America's integrated supply chains and the long-term direction of US-Canada relations. At the heart of Trump's proposal is the belief that Canada benefits disproportionately from the trade relationship, a claim Ottawa strongly disputes. The former president has accused Canadian exporters of undercutting American industries through subsidies, favorable regulations, and access to US markets without equivalent reciprocity. These accusations are not entirely new. Trump's first term saw similar disputes over softwood lumber, dairy imports, and aluminum exports, but the intensity of the current rhetoric suggests a more aggressive economic strategy. This time, the scope is broader, with tariffs potentially covering a range of goods from critical minerals to manufactured products. The economic stakes are enormous. Canada is the United States' second-largest trading partner, with bilateral trade exceeding $900 billion annually. Every day, goods worth over $2.5 billion cross the border, supporting millions of jobs on both sides. Energy plays a particularly crucial role, with Canada supplying nearly 60% of U.S. crude oil imports and serving as a key source for natural gas, electricity, and uranium. Metals like aluminum and nickel, vital for manufacturing and defense industries, also flow south in large quantities. Tariffs on these resources would not only raise costs for American businesses but could also create supply shortages in sectors already under pressure from global competition. For Canada, the consequences could be equally severe. The U.S. accounts for roughly 3/4 of Canadian exports, meaning any trade barrier imposed by Washington would have an outsized impact on Canada's GDP. Key provinces such as Alberta, Ontario, and British Columbia would be hit hardest. Alberta for its energy exports, Ontario for its automotive and manufacturing sector, and British Columbia for its forestry products. The timing could not be worse, as Canada is still navigating post-pandemic economic challenges, including high interest rates, slowing consumer demand, and the need for new foreign investment. Ottawa's initial response has been firm but measured. Prime Minister Justin Trudeau's government has emphasized Canada's commitment to fair trade and has warned that retaliatory measures would be swift and targeted. Behind closed doors, Canadian trade officials are reportedly exploring a range of countermeasures, from imposing tariffs on U.S. agricultural products to seeking new supply chain partnerships with Europe and Asia. The government is also ramping up diplomatic efforts in Washington, mobilizing both political allies and business leaders to push back against the tariff proposal before it gains legislative traction. The political calculus in the United States is equally complex. While Trump's tariff threats resonate with portions of the American electorate concerned about domestic manufacturing jobs, they also face pushback from U.S. industries deeply dependent on Canadian imports. Auto manufacturers, in particular, are sounding alarms. The North American automotive industry operates on an integrated production model, with parts crossing the border multiple times before final assembly. Tariffs would raise costs, disrupt production schedules, and potentially lead to layoffs, outcomes that could hurt Trump politically in key manufacturing states. Historically, trade disputes between the two nations have been resolved through negotiation and compromise, but the current climate is more volatile. The world is witnessing a broader shift toward protectionism, with countries prioritizing national industries over global integration. The US-China trade war of the late 2010s set the tone, and Trump's renewed threats against Canada fit into this larger pattern of economic nationalism. For Canada, the challenge lies in defending its economic interests without escalating the conflict to the point where it damages the broader bilateral relationship. One of the most concerning aspects of the proposed tariffs is their potential impact on strategic industries. Canada's mining sector, for example, is a major global supplier of critical minerals such as cobalt, lithium, and rare earth elements, resources essential for electric vehicles, renewable energy technologies, and advanced electronics. The United States has identified these materials as vital to national security, making any restriction on their trade with Canada both economically and strategically risky. Analysts warn that such measures could inadvertently push Canada to deepen partnerships with other major economies, including the European Union and China, in ways that might dilute U.S. influence over North American supply chains. In the agricultural sector, tensions are already rising. U.S. farmers have long complained about Canada's supply management system for dairy, poultry, and eggs, which they argue restricts market access and creates unfair competition. Trump's tariffs could be designed to pressure Canada into dismantling or significantly altering these systems. However, such a move would be politically explosive in Canada, where supply management is deeply entrenched and supported by powerful agricultural lobbies. The risk of a prolonged trade war in this sector is high, and both sides could suffer economically as markets adjust to new barriers. Energy exports present another flashpoint. Canada's role as the largest foreign supplier of energy to the United States has been a cornerstone of the bilateral relationship for decades. Any disruption to this flow would have immediate consequences for U.S. consumers, potentially driving up fuel prices and straining energy security. Canadian energy companies, meanwhile, are already exploring diversification strategies, including expanding pipeline capacity to the Pacific Coast to reach Asian markets. Should U.S. tariffs target energy, these plans could accelerate, leading to a long-term realignment of North American energy flows. Financial markets have responded cautiously to the tariff threats. The Canadian dollar has seen periods of volatility, while U.S. investors are assessing the potential inflationary effects of higher import costs. Cross-border investment decisions are being delayed as companies wait for more clarity on the policy direction. Economists warn that uncertainty itself can act as a drag on economic growth, reducing consumer confidence and slowing capital flows between the two countries. The diplomatic dimension of this dispute cannot be overlooked. Canada and the United States share one of the longest undefended borders in the world and collaborate closely on issues ranging from defense to environmental protection. A prolonged trade conflict risks undermining trust and cooperation in these other areas. Moreover, Canada's status as a NATO ally and a member of the G7 means that tensions with Washington could spill over into multilateral forums, affecting broader alliances and strategic objectives. In the public sphere, the tariff threats have reignited debates about Canada's economic independence. While the United States will likely remain Canada's top trading partner for the foreseeable future, there is growing interest in diversifying markets. Recent trade agreements with the European Union and Pacific nations offer potential alternatives, though building these trade flows to match the scale of US-Canada commerce will take time. Some Canadian policymakers argue that Trump's threats should be a wake-up call to reduce dependence on a single market and invest in domestic industries that can compete globally without relying on preferential access to the U.S. Business leaders on both sides of the border are also entering the fray. Industry associations, chambers of commerce, and multinational corporations are lobbying aggressively against the tariffs, warning that they would hurt competitiveness, raise prices, and erode the integrated nature of the North American economy. Some are even considering legal challenges under the United States-Mexico-Canada Agreement, USMCA, arguing that the proposed tariffs could violate provisions meant to ensure free and fair trade. While the political theater surrounding Trump's threats is intense, it is not yet clear whether they will translate into actual policy. The process of imposing tariffs is complex, requiring consultations, economic impact assessments, and potential legal reviews. Congress may also have a say, particularly if key industries mount significant opposition. Nonetheless, the mere possibility of such tariffs is enough to influence decision-making across governments and businesses, underscoring the power of political rhetoric in shaping economic realities. For now, Canada's strategy appears to be a blend of firmness and pragmatism, preparing for the worst while leaving the door open to negotiation. Whether this approach will succeed depends on a range of factors, including the domestic political climate in the United States, the strength of Canada's alliances, and the willingness of both sides to prioritize long-term stability over short-term political gains. If the dispute escalates, it could mark a turning point in U.S.-Canada relations, reshaping not only the economic landscape but also the political and cultural ties that have bound the two countries for generations. What began as a policy proposal from a single political figure could, in the absence of careful diplomacy, evolve into a broader test of North America's capacity to manage conflict in an era of rising nationalism and global uncertainty.